Hello listeners, and welcome to Plugged In, the Energy News podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. This week, we're examining the state of the traded wholesale market and some of the pressing issues that participants are navigating, honing in on the energy exchanges in particular. How is competition hotting up for financial power trading in the Nordics? Is there a risk of fragmenting liquidity in the futures market? Are negative prices deterring investment into renewables? And is the European Commission's proposal to install single market coupling with a central operator fixing something that ain't broken? In this episode, I'll be speaking to the bosses of two of Europe's biggest exchanges about some of the challenges, changes, and choices they are facing at the moment. Let's hear now from Tom Darrell, the CEO of Nord Pool, and Peter Reitz, the CEO of EX. But first, I'm joined by one of our Germany reporters, Julia Demedag. Welcome back to the podcast, Julia.
Thanks for having me again.
I'd like to start by asking you, Julia, what changes have we seen in the marketplace over the last few months?
Yeah, I think it's been some very interesting months for energy markets overall in the past few months. We have seen a lot of volatility. There has been the scare over the winter that Europe may run low on gas. So I guess that's something that's been keeping markets busy. And I have the feeling that people are being more calm about this now. So even though volatility can be high on single days, I think the overall price levels have eased a bit and markets seem a bit more quiet.
Before we go to the main part of the episode, can you tell us a little about the countries in Europe that have the most liquidity, high levels of intraday trading, volatility, for example?
So I would say, obviously, looking at the short-term trading, we have to look at Germany. It's the biggest market with the highest volumes, and that's also the leading market in Europe. And they also have a big share of intraday. And with the new trading, like when Europe switched to the 15 minutes trading, then I think, that's affecting all markets. And another market that's important, obviously, is the Nordics. There we see a big chunk of the trade is taking place short term. And that's also, where we're looking at the market shares for the single exchanges, which is something we're going to touch briefly later.
Perfect. And can you just highlight some of the challenges that exchanges like Nord Pool and the EX, what they face in the months and years ahead?
I would say the market has been changing rapidly over the past months and years even. So there has been a high influx of renewables. So that's something they have to adjust to. They have new products developed. And also, I think another thing we should look at is regulatory things. So will there be changes to the market zones, the pricing zones? That's something exchanges are very aware of because it can mean a big impact on their business model, really.
Julia, thanks very much.
You're well welcome.
It's with great pleasure. I'm speaking now to Tom Darrell, the CEO of Nord Pool, and Peter Reitz, CEO of EX. A warm welcome to you both, gentlemen.
Good morning. Good morning. Thank you.
I'd like to start with the green transition. So, Peter, how are you and other exchanges adapting to the growing need for flexibility and while still delivering clear price signals and predictable revenue streams?
Well, we see ourselves as a driver of the energy transition, and we do that in several ways. And it starts with actually putting a price to carbon. EX is the auction platform for all of the European states to determine a price for the emission of carbon. And that will be expanded, as we know, with the ETS2 coming up, with covering new sectors. And then when we come to the electricity market, it's all about integrating renewable energies into the existing market. And we do that from the very short end of the curve, so at the spot market, where you can now trade 5 minutes before delivery. That gives flexibility, especially to those who don't know exactly how much they're producing. So if you're running a solar panel farm or a wind farm, you only know very short before it actually happens how much you're going to produce. And that's why we need to provide the instruments for that. And one major step in that regard was our common effort to shorten the periods of time that people can trade. So 15 minutes was a major event last year when we moved all the short-term markets into a more granular steering of the market price. And it goes all the way to the very end of the curve where we at EX, we trade power until 10 years out. And that's also important for producers of renewable energies who want to finance new energy production sites because for their banking, they need an income stream for 10 years and they need a risk management tool for that as well.
Be able to hedge that, absolutely. And how about you, Tom? How's Nord aiding the green transition here?
To build on what Peter said, we have also in the physical market in the last 12, 14 months undertaken a lot of big projects actually, which is reflecting more the imminent nature of renewables. We have more granularity, 15 minutes in intraday markets. We have 15 minutes in day ahead, which is also a part of enabling the green transition. We introduced Nordic flow-based. We have done changes to the balancing markets from the TSO perspective. And also we are seeing increased volumes in intraday, which is reflecting the fact that there is a bigger need to trade closer to delivery because we have a weather-based system where when we nominate 36 hours in advance, things are happening in the meantime. So also allowing market access to the intraday market is a part of it.
Absolutely. And I think that's clear, isn't it? As good as weather forecasts are, changes can happen very quickly. I want to stick with you, Tom, and I'll come to Peter in a minute, but the European Commission and regulators have been keen to push a single market coupling operator. Could you just, in a few words, explain what that is and what your view is? You kind of changed your opinion slightly on this, Tom. Could you explain what that is?
Thank you for giving me the chance to answer that question. We have advanced our position in line with the discussions we have been having over the last year. We are saying that we acknowledge a need for strengthening the governance part. So we are therefore also then supporting the Commission's proposal of creating a common NEMO TSO entity with stronger decision capabilities.
Could you just explain what a NEMO is for those listeners unaware?
Sorry, those are the exchanges. Those are the nominated electricity market operators. So we think a common entity to improve the governance, to shorten decision time, to make decision-making more effective by moving to qualified majority voting as opposed to anonymity voting, will shorten decision times and also thereby decreasing the implementation times on new projects. Where we are not agreeing with the Commission is also proposing to consolidate the decentralized market coupling. We think that is working well today. We have never had the complete decouplings caused by the collaboration between the NEMOs, meaning that there are more than one NEMO computing the prices. This structure is today giving redundancies because we have backup NEMOs doing calculations. So if one NEMO has a problem, there is another one taking over. We think that the Commission can de-risk the implementation by focusing on the governance part, which we acknowledge have its weaknesses today, but preserving then the decentralized NEMO price calculations. And we think it's going to be extremely complex to move to a single legal entity on that side. It's going to be costly, it's going to take a long time, and it's going to be risky, and we are introducing a common single point of failure. So yes, we can support the single legal entity on the governance. We need to preserve and improve what we have on the decentralized coupling.
Okay, thank you, Tom. And Peter, what's the view of EX on this matter?
We're very much aligned in this direction. We have a common view that we don't think a central operator is the right solution. We support the Commission in several other aspects of this change. Like Tom explained, we need new voting rules in order to make the system flexible and get quick decisions. We also support the Commission in its effort to abandon monopolies, which we still have in about a third of Europe. Competition, I think, is good for the market as a whole. We're not far apart here. We're very much aligned in our position. The current system works well. Introducing a single market operator introduces a single point of failure, and that's a big risk to this market that we shouldn't go into. And it creates a monopoly, and that stifles competition and innovation. That's what the market needs. So why change dramatically a system that's working very well today? I think we have to create improvements on the edges, like the decision-making process.
Do you find that the Commission or the regulators are listening to your points of view?
Hard to say at this moment. I mean, there's a lot of discussions happening. A lot of views are put into this discussion. We have had a lot of meetings with all decision makers in this, the regulators in particular, the European Commission. Acer is an important player in all of this. So we will see what comes out of this, because they're having discussion with a lot of other players as well.
So it's an ongoing process.
It is.
Yeah, absolutely. I'm sure that's the case. What a big element of the energy transition and of, the move to this increased amount of renewables coming into the system, Tom, is the scale up and the involvement of batteries. How does the scale up of batteries and aggregators affect short-term products?
Well, I feel we have just scratched the surface in terms of integrating that flexibility into the market. And I think we are also seeing such a big scale up in capacity coming in this year, next year, if you look at the projects. I mean, for the time being, we are having aggregators and VPPs that are aggregating these
Virtual power plants, yeah.
Virtual power plants that are integrating that, aggregating that flexibility and providing market access to do portfolio bidding. I think we will see a lot more development, and to be honest, I don't have all the answers how this will play out, but one issue is the capture rates are falling, right? And we see more negative prices, and so therefore we need the storage to play into this equation to secure bankability of future projects. Currently, these flexibilities are mostly taken into the intraday and the balancing markets. But the flexibility markets will be a future strategic area for us. We will work with the ecosystem to make sure that we are able to grant market access in the most effective way. But I think it also goes along with the fact that we need to create more flexibility on the demand side.
We'll return to the issue of negative prices and also the futures market in a minute. But Peter, what's your view on the role of batteries and of aggregators in the market?
It's sort of a new customer group for all of the power exchanges. And we see a lot of new players coming into the market, providing that flexibility. In batteries in particular, we're also seeing combinations of things. When a lot of people who are building new solar parks today, building the battery right next to it so that they can sell the power not only when they produce it, but also when the market sends a signal that, prices are high. So, and that's also a way to get around this cannibalization effect where you see negative prices at times.
Tom mentioned negative prices. So renewable outputs, as we see across Europe, is increasing the instance of negative prices and sort of cannibalization of merchant revenues. How do you think the marketplace can still attract investment in clean generation and storage despite the increasing prevalence of negative prices, Peter?
Exactly the way I just described it. It's the combination of renewable power, because that's the cheapest way to produce power these days, with a facility to store it, at least for some hours, so that you can market it at a time when prices are high. And we see increasing spreads throughout the day between the lowest prices of the day and the highest prices of the day. And that's the perfect business case for a battery. So I think the future will be, we will see a lot of combinations of, for example, solar plants and batteries together that then will be marketed across the exchanges.
Absolutely. And I think we've spoken on this pod about the queuing system or the congestion in terms of getting those batteries on the grid, but that's a completely different matter. But of course, that's also very important to get that onto the grid and into the market. But what's your view here, Tom?
I fully agree with Peter that this is from a market perspective and a new customer segment, right? The best part, the battery part, goes along with renewable assets so that we can charge, when prices are really low, and we can deploy back when the prices are higher. We also need to focus on the demand side because, for an industrial off-taker, if you're able to exploit, if you have enough flexibility to exploit the affordable prices or the low prices, so that you can also, if you are into steel or chemical or automotives or some of the big fertilizers, if you are into some of the big green steel projects, e-fuel, if you electrolyzers, if you can create more flexibility on that side and take advantage of it, it will also play very nicely into this equation, because you will create the right frame conditions for the industry, but you will also create frame conditions where you consume more when the electricity prices are low, which is also a reflection of the imbalance or a surplus or a deficit situation, right?
I want to move as well to the futures market. I'll start with Peter. Nord Pool has announced plans to launch a futures market there from March, if I'm not wrong, Tom. We can see the forward market liquidity in the Nordic market is recovering, but it will obviously become a very competitive space. What's the risk of fragmentation of liquidity here, Peter? What do you think? What's your view?
First of all, I think competition is good for the market, and that people have a choice is good. The current incumbent exchange, if you want to call it that, NASDAQ, is leaving the market. So each of the customers has to make a decision where to move their business, because there is a growing need, we think, of trading derivatives and hedging prices across Scandinavia. And we at EEX have created a very good offering for that, with a lot of incentives and growing liquidity. And we see increasing customer inflow already today. A lot of people are moving open interest into our clearinghouse ECC, especially the more international players, because there's a big capital savings that they can achieve by moving their Scandinavian power positions into the same clearinghouse where they have all their other power positions across Europe. So that is something we've seen already over the last 4 months. A lot of uptake. We offer a complete set of products, not only for the Scandinavian market as a whole, the so-called system price, but also for each individual price zone across Scandinavia. And that is something that people appreciate. Of course, we can also offer all the spreads, the so-called EPETs as well. So people have a lot of choices, and there are market makers in each of these products. There's been trading in each of the price zones, so the liquidity is developing, and I think that's good for the market overall.
Absolutely. What's your view, Tom? I mean, competition is good. So what's gonna make your product so competitive, and that the choice of the customers will come to you instead of maybe to Peter's exchange?
Yeah, this is for us a very important project. We've been working very hard to get to the readiness level we are now, and it's looking good in terms of the migration date, which is 14th of March. We have technically opened the market. It works well, which is an assurance ahead of what will happen next month. Yeah, obviously, I mean, this is something which for us is making us more having a comprehensive offering, making us a relevant partner to our customers. We have a strong belief that we will grow the size of the market through the relevant offerings, through a resilient platform, competitive commercial offers, and strong local presence and knowledge of the local market. And we are also having new customers onboarding with us, entering the market. We see an interest from that side. So yeah, it's an exciting time ahead, and I'm optimistic.
Okay, glad to hear it. And I think the future will tell who is the winner here. But I'd like to also focus back to the intraday market. We see that the intraday volumes and liquidity is low in the Nordic, but it's better in continental Europe. Why is that, Peter?
Actually, I don't share that view. You always have to look at it in the context of the overall liquidity of the market. At our market at EPEX, we've looked at statistics of last year. About 16% of our Nordic trading was in intraday. When you compare that to other markets like Germany, Belgium, France, it's in the same range. So the intraday market is not less liquid compared to the overall liquidity of the Nordic market as a whole.
Okay, that's a good point, Peter. What's your view here, Tommy?
What's really interesting, I can build on that point of Peter. What's interesting to see is that if we compare August 25 to February 26, we have a 50% increase in intraday volumes in the Nordic. So there is something happening now. And I think it's a combination of more renewable. It's a combination of better systems or technical sort of systems that are enabling automated trading. So there is a change in the Nordic now. If you look at the absolute volumes, it's still lagging behind continental Europe. But bear in mind that Germany is more than 50% of the total SIDC volumes, right? So I think Germany has been a big front runner in terms of intraday trading. But we see that has changed in Benelux. It is changing in France. It is also changing in the Nordic. And the proportion, as Peter is saying, is rising everywhere. We are moving towards some sort of 80-20 picture now. And this will continue.
Yep. And is that, Peter, because of the increased use of sort of bots, the automated trading, but also the massive amount of renewables coming into the system? Is it a combination of the two? Maybe there's another factor involved here.
No, I think those are the two main drivers. The share of intermittent renewables, let's call them that, because those are the ones who really need the intraday market because they only know very short term how much they're actually going to produce. That's where we've seen a growing trend in the intraday market across all of our markets at EPEX. The intraday market for the last 15 years has been growing double-digit every year. It's really the growth driver for the whole spot volume. So the share is increasing as the share of renewable is increasing. And yes, most of the trading that we see on this intraday market comes from algo trading, not only from new players that are specialized in that, but also existing players are using much more automation of their trading strategies.
One of the headaches, certainly in the Nordic area and others, has been splitting markets into zones, Tom. Does this solve congestion problems at the expense of liquidity, for example?
When the TSOs are explaining topologies and valleys and mountains and which direction water is flowing and constraints in the transmission lines, I do understand the reasoning, right? I do understand what the physical reasoning behind the zones are. From a physical market, we see big price differences between north and south, which is creating a lot of debate because it's hard to explain. In the financial market, it's clearly not a favorable thing. I mean, from a financial market perspective, we like as big bidding areas as possible to create, a liquid market with plenty of counterparts, right? So yes, it is an interesting topic, and it's interesting to see now because the Swedish minister has instructed the TSO to look at Sweden. Then we have Norway left with 5 price areas, and we are even discussing the 6th. So from a market perspective, it's not an ideal thing.
Germany, obviously, there's been that discussion about splitting the bidding zone. They decided against it. Is it in the Nordic region? Is it a headache for the trading community?
It is, especially for those who want long-term hedging, because you need, as Tom explained, you need many players who have an interest in that particular price that is determined. And the bigger the price zone, the larger the community that is acting in it, the better the price formation mechanism that we provide as exchanges. So splitting zones into even smaller things is not a good solution. Reason for having small zones is because the grid can't handle it. Then grid expansion is the solution, not splitting zones.
That's a fair comment, absolutely. But we're here at eWorld, one of the biggest trade fairs for energy probably in Europe and the world. And Peter, we spoke a few years ago about a product you launched at the time, Guarantees of Origin. Could you talk us, and the trading of green energy, could you talk us a little bit through how that has gone and how you see the direction of travel there for Guarantees of Origin?
I think Guarantees of Origin are a crucial part of this energy transition. It's a market that we've been developing over a long period of time. Started in many years ago when we were way too early for it. There was not enough standardization for this market. So we've taken a different approach of building the infrastructure first. We're running the registries of many European countries for Guarantees of Origin. And that means that, first of all, you have to make sure that the actual transfer happens smoothly. And then we built a spot market with the auctions that we're now running at EPEX for Guarantees of Origin. So you have an underlying price. And now we have again launched futures on GOs, standardized products. And now it's really becoming a market. It's one of our fastest growing markets. We have a lot of interest in that. A lot of players have already signed up to it. We add new players every week. It's a fast growing market. And we have even extended our product range now so that you have a choice of all different technologies with it, and extended the range in terms of maturities. So it's it's a fast-growing market. We think it's an essential part of the energy transition.
And having it on exchanges obviously boosts, as a massive boost to transparency of those prices for all market participants. So is this of interest to Nord Pool, Tom, the listing of guarantees of origin?
It's not something we are into at the moment, but it's something we are exploring.
Okay, interesting. And that's something we watch very carefully, I think. And I think maybe in competition, you guys with the brokers that are out there, we often receive views from market players that the guarantee of origin market is a little bit lacks it somewhat in transparency in terms of price transparency. But
no, I agree. And I think also from that perspective, it's interesting to discuss, what's the right product structure for the future. Should it be a more granular, continuous structure, right? And that's also something we are looking at.
And I think that's being discussed, potential reforms to the guarantee of origin market as well, the greenhouse gas protocol, and then changes to that. Final question, gentlemen. I realise we're running out of time very fast, but how can you ensure market access to companies who don't have large trading desks, Peter?
We have a variety of access models to the exchange. You don't have to become an exchange member to benefit from the exchange price discovery mechanism. There's plenty of players in the market that provide direct access facilities, be it banks, be it bigger utilities, be it brokers, and they're all providing routes into the central market that we as exchanges operate. And the same is true on the clearing layer. We also provide access models for smaller players to have direct access to the clearing, so that they can, manage their positions and their risk on the spot markets in particular, spot power, but also spot gas. Trying to reduce the barriers of entry as much as we can, and we've seen a lot of smaller players now acting directly on the exchange.
Tom, anything to add there?
I see it exactly in the same way. Also different kind of aggregators or client representatives models, lowering the threshold for some of the smaller players.
Well, gentlemen, thank you very much indeed for being guests on the Plugged In podcast. We'll watch the competition in the Nordics very closely in the coming months and years. But thank you very much.
Thank you for having us.
Thank you, Richard.
And to you listeners, thanks for listening to this episode of Plugged In. If you enjoyed this discussion, please like, rate, and follow to make sure you get the latest podcast episodes as soon as we release them every Thursday. We'd also love to read your reviews of the podcast. It helps us to keep up to date with what you, our listeners, think of the podcast and what content you want to receive more of. Finally, you can head to montelnews.com for more news and analysis from our team of journalists across Europe and beyond. See you next time.